Welcome to the Forex and CFD Market Focus Report for Tuesday, October 1st, 2013. Let's go ahead and take a look at our calendar for today. It's been a very busy day. We had some improvement in the Australian PMI data that came out overnight. We also saw some weaker Japanese labor market data. We saw the unemployment rate move higher to 4.1%, and we saw a 1.6% decrease in year-over-year household spending. On the bright side, the Bank of Japan quarterly Q3 Tankan Large Manufacturing Index came in much higher than expected at plus 12. That was up from the prior reading of 4. Along the same lines, the large manufacturing outlook improved to 11 from the prior reading of 10. And we also saw an improvement in the services index. The non-manufacturing index picked up to plus 14 from plus 12. And the outlook increased to plus 14 from plus 12 as well. We saw a pullback, however, in some capital expenditure data with the Tankan. The Reserve Bank of Australia, the RBA, voted to keep interest rates unchanged at 2.5% as expected. We'll take a look at the action in the Australian dollar that occurred as a result of this interest rate decision. Of course, we saw the U.S. government shut down for the first time in 17 years overnight. U.S. Congress, Senate, and President Obama could not agree on a budget stalemate, and more than 800,000 federal workers will be furloughed as a result. In Australia, we also saw a pickup in retail sales, 0.4%, and we saw a marginal improvement in official Chinese manufacturing PMI to 51.1 from the prior reading of 51.0. Moving on to Europe, we saw some weaker manufacturing PMI data in Italy. We saw a marginal increase in French PMI. And we saw a surprising unemployment change of 25,000 workers in Germany, much weaker than expected. As a result, the German unemployment rate ticked higher to 6.9% from the prior reading of 6.8%. German PMI manufacturing softened to 51.1 from the prior reading of 51.3. And we saw a marginal increase in the Italian unemployment rate to 12.2%. Moving on to the U.S. session, we will await market final PMI data today, along with construction spending, ISM manufacturing, and ISM prices paid. We also wait in Europe today. The UK, we await the UK PMI manufacturing data, expected to come in right around 57.5. Finally, in Europe today, we saw the Pan-European Eurozone PMI manufacturing print remained unchanged at 51.1 as expected. Let's go ahead and take a look at some other asset classes today. Here we can see a marginal appreciation and improvement in the price of gold against the US dollar, currently trading right around the 1332 area. Gold is higher today on the US government shutdown. Traders are purchasing gold as a hedge in case the shutdown lasts longer than expected. Traders are also buying gold ahead of the fiscal cliff 2.0. That is the date, October 17th, when the U.S. is expected to breach its debt ceiling limit of approximately 16.7 trillion US dollars. Much the same story here in silver today. Silver currently trading around 21.78. Traders are purchasing the metals complex again as a hedge against the U.S. government shutdown and lots of political uncertainty in that country. Moving on to another asset class, the energy asset class. Here we have Brent crude futures. We can see they are trending lower on the day, trading around 107 spot 38 and trading as low as 106 spot 95. Oil is moving lower today on the shutdown in the U.S. government. With most of the U.S. government shut down, there will be less demand for energy products and crude oil in the U.S. as a result. Also quite the same story here with West Texas Intermediate futures. Currently trading around 101 spot 88 and earlier trading as low as 101 spot 62. We will receive some API data later today concerning U.S. crude stockpiles and petroleum stockpiles, followed by weekly EIA data tomorrow. A report released earlier today indicates that OPEC is producing a record amount of oil. Let's go ahead and take a look at our FX activity today. We can see here that our strongest currency today is the Australian dollar on the back of that RBA interest rate decision and better than expected Australian economic data. The US dollar is quite weak across the board, as we can see here. That is as a result of the US government shutdown. It's a mixed story here for the Japanese yen. This is our daily US dollar activity index. The US dollar September activity index was at its weakest level since approximately October 2011. Here we can see the US dollar is below the horizontal neutral line here, indicating a nice intraday downward trend for the US dollar. All eyes remain fixated on the U.S. government shutdown and the pending breach of the U.S. debt ceiling. Moving over to the euro, we see a little bit of a downward trend today. Of course, the weaker than expected German employment data did not help the euro's cause. The European Central Bank will release its interest rate and monetary policy decisions tomorrow. Traders do not expect the ECB to change policy. Yesterday's Eurozone data saw benign inflation data, CPI data around 1.0%, 1.1% in the Eurozone. The markets are paying very close attention to see if the European Central Bank, the ECB, will indicate any likelihood of extending LTRO operations to supply liquidity to the European banking system. So we await the ECB interest rate decision tomorrow. Over here in the yen, the daily activity index, we see not much of an intraday trend here for the yen, despite the better than expected quarterly Tankan data out of the Bank of Japan overnight. In Japan, we also saw Prime Minister Abe confirm that he has agreed to increase the national sales tax to 8% from the current 5% level. That move will take effect from April 2014. We also await details regarding a supplementary budget in Japan. That is expected to come in around 5 trillion yen. We see a little bit of an upward daily trend here, an upward bias to the British pound, trading above the blue neutral line. We'll see if sterling can continue to outperform some of its other major currency peers. Bank of England is expected to keep monetary policy unchanged this month, and traders await any additional market data that may indicate inflation may be too much for the Bank of England to handle and force them to alter their forward guidance ahead of the anticipated increase in UK interest rates in 2016, when the unemployment rate is expected to return back down to 7%. We can see not much of a trend here in the Swiss franc. It's barely trading below water today. A little bit of a downward bias there with the Swiss franc. Here in Australia, we can see the Australian dollar daily activity index is way above the blue neutral line. A very nice intraday upward bias for the Aussie. The RBA, notably in its policy decision today, did not mention that the Australian dollar needs to weaken. That is a stark contrast with recent RBA statements, where the RBA clearly tried to talk the A dollar down. So the A dollar moved drastically higher today on the heels of RBA's interest rate decision and what it did not say concerning the Australian dollar. Better than expected Australian data also contributed to the appreciation of the Australian dollar today. Canadian dollar has a nice downward bias here today, following the US dollar lower. It's trading significantly below the neutral blue line here. Finally, the New Zealand dollar also has a nice downward bias, trading below the blue neutral line here. New lending restrictions took effect today in New Zealand. Reserve Bank of New Zealand is attempting to slow the appreciation in house prices across the country. Let's go ahead and take a look at some FX charts and some cross rates here. Here we have a major. We have the Australian dollar against the US dollar. This is a daily chart. You can see that the Australian dollar came off a little bit during the Australian session. It did, however, not test this 92.67 area, and instead moved higher and broke through some key resistance levels overnight. We can see it took out the 93.38 area, then it took out the 93.66 area, and finally moved above the 94 figure, trading as high as the 94.25 area. Any additional continued appreciation in the Australian dollar we would expect would test some resistance around the 94.32, the 94.69, and then the 95.13 levels here on the upside. This is a daily chart of the Euro-Canadian dollar cross rate. We can see that at the 5 o'clock roll at the end of the month of September trading activity, there was a nice upward gap for the euro. The euro then came off to perfectly test this Fibonacci support level, this red line coming in here at 139.42, and then moved nicely higher to trade as high as the 139.89 area. Any additional price appreciation, the euro will definitely need to test the 140.12 area on the upside. This is a daily chart of the sterling Kiwi cross. This is the British pound New Zealand dollar cross rate. We can see that sterling continues to hug this yellow uptrend line here. We can see today's intraday high was just above this 50% retracement level, which currently represents resistance. That line comes in right at 195.62. If sterling continues to appreciate against the New Zealand dollar, we would expect a test of the 196.83 area, followed by a possible test of the 198.34 area on the upside. Finally, this is our Swiss franc Japanese yen daily chart. On this cross rate, we can see that the Swiss franc is stronger than yesterday's close. However, the Swiss franc has recently come off. and is trading lower here during the European session against the Japanese yen. We can see the Swiss franc lacked the follow-through to test the 108.99 area up here. Any additional downside weakness, we would expect a test of the 108.35 area, followed by a test of the 108.10 area down here. We thank you very much for tuning in to today's Forex and CFD Market Focus Report.